What's up, everybody? Welcome to Chaos. My name is Brad. That guy over there is Fat Man Zoom. The stock market is crazy and chaotic. I feel like it is just crazier and more chaotic as the days go on, Fat Man Zoom. But we're here to help you guys own it. And if you guys are new, first of all, we would like to invite you to obviously like and subscribe. But Fat Man Zoom, what we got for the top five?
Starting five, we have Joel, Jonathan, Steve, King, Drew, and Savvy. What's going on? And special shout out, we have a new crew member, Anita Johnson, level 1. Welcome.
Welcome to the crew. And speaking of the crew, we want to welcome you guys to actually hit that join button next to subscribe. So if you guys aren't part of the Chaos crew, we'd love to have you there. We give our daily watch list, access to our portfolios. There's also Discord access, all that good stuff. If you guys want to be a part of the Chaos crew, it starts at $5 a month. You don't have a whole lot to lose there. So if you want to help support the channel, help support this awesome studio behind us, hit that join button. We'd love to have you guys as part of the Chaos crew.
Yes, sir. So if you guys haven't been familiar with Stock Watch Sunday, we're going to go over a main topic. And tonight, actually, we're discussing a few things. We'll then get into our top 5 stocks we're watching for the week. Brad will throw down on his cheesecloth condom and his triple C stocks. And this week, we're actually going to add a new little wrinkle. We had some Chaos Crew questions come in, so I'll throw you some Chaos Crew questions.
Yeah.
Are you ready to begin, my friend?
Yes, I am.
All right. So the first topic of discussion is Amazon. So the Amazon union efforts. Let everybody know what's going on, and how do you think it's going to impact the stock?
Yeah, so first of all, I just want to say, talk about what exactly is happening here. And so, tomorrow, actually, there's going to be a vote on 6,000 Amazon workers to potentially unionize, which is actually really interesting because that it's actually happening in Alabama too, because Alabama isn't really known to be a state that typically goes this route. And so there's a lot of people, a lot of eyeballs on this, because if this actually goes through, then this could potentially be a trend across the U.S., across the world. If you guys don't know, Amazon employs 1.5 million people. And experts say it might be the most important union vote that we have seen in decades. Warehouse workers could provide a roadmap to unionize at Amazon and beyond. It was quoted by Lynn Vincent saying that it may be the most important vote. Oh, yeah, you already said that. In decades, I'm reading it twice. But essentially, it's the richest man in the world against the workers. We've seen some banter between Jeff Bezos and company, and some people in Congress as well. Basically, Amazon's coming out and saying, "Hey, we have no reason to unionize because we're one of the most progressive companies there is out there. We provide a really great compensation program. They have good benefits. You get them on day one from when you're hired, and Amazon really isn't quite understanding. But then there's also reports about people having to pee in bottles, and there's so much pressure on the deliveries and that sort of thing, and that's why they're trying to unionize. And I actually put a poll out on Twitter. Feel free to follow us out on Twitter at OnTheChaos, at FatManZoom. There's some real issues here, and so actually the poll was split right down the middle. There's a lot of people that are like, maybe it's overblown or maybe it's not. So it's really interesting.
Explain what you actually made a tweet about.
So actually, I originally wanted to make it a little bit more lighthearted because at first I was like, this sounds kind of crazy to me. And then the more I dove into it, I was like, well, wait a minute, maybe there is something here. But I basically went out and said, how are we feeling about this drama with Amazon? I really kind of directed towards the Chaos crew. I said, are workers peeing in bottles and shitting on the sidewalk or what? And 51.9% said it's true, to 48.1% saying that it is bullshit.
Yeah, so there's a lot to unpack.
It really is.
The thing is, this is one of those issues that has no right answer, because I can make the argument for both sides.
Yeah.
Unfortunately, because of historically big business and cronyism, there is a place for unions.
Yeah.
However, unions don't always make sense. Right. And they might seem like the right idea, but they're not always the right idea. And I fear that this might be one of those cases that it's not the best case scenario.
Yeah.
I could be wrong. But what ends up happening is we'll get it. We're going to do a little bit of lesson here. I feel like I need my my glasses, Professor Crash. Professor Fat Man Zoom about to go down. No, it's called equity theory. So for all you guys, all you managers out there, there's this idea, I don't know if you remember this from management class, but there's this idea that people at the same level, so coworkers at the same level, are going to end up producing the same amount. And what that means essentially is if you have somebody who's performing at this level and another person performing at this level, then at some point they'll meet.
Yeah.
They'll always meet. 99.9% of the time, they'll meet at the lower level. The high performer will come down.
Yeah.
It doesn't work the other way. As much as we want it to work the other way, it doesn't work the other way. And so essentially what happens in unions, and we see this with government, right? Government workers, they're historically known as lazy.
Good enough for government work.
Yeah.
That's where it comes from.
Shout out to the government workers just getting by, collecting the check. But what I fear is going to happen is the middle doesn't really matter. The underperformers, this benefits because they're going to get more compensation than what they deserve. It's going to hurt your high performers.
Yeah.
That's how this works. And in such a huge company, if you want to stay ahead of the trends, I feel like this is going to hamper them. Now, is Amazon going to be fine? Yes, it's going to be fine. But I think if you compare the company theoretically with a union without, ultimately it would be better off without. That's my opinion. However, unfortunately, the world we live in, companies haven't been reliable or trustworthy. As far as the other stuff about peeing, whatever, I want to see stuff happens. Big enough company, stuff happens.
Yeah, when you have 1.5 million employees,
you're gonna I would have an issue if it was reported and put under the rug, brushed under the rug or something like that. But if it's just brought out now, come on. So that's my one concern. So we'll see what happens as far as that's concerned.
Daniel Camarena says FedEx does regular urine checks for us drivers, and we get tested every month. So I guess you kind of do pee in a bottle. But
do you shit on the sidewalk?
So how does this impact the stock? And I think that's going to be the big question. So this obviously taken a little bit of a downturn over the last three trading days. It's been pretty red. And so I think that if the union does go through, if the vote does go through, this could negatively impact the stock. It could potentially be a good thing. We have to see how that shakes out. We won't really know the answer until it's done. But I think it's going to negatively impact the stock if the vote does go through, in my opinion. However, I think this would be a good buying opportunity. If we look at the stock in general, just looking at the daily chart, I think that it's trading well below its 200-day moving average. So if it falls even further than that, I'd say it's even more of a scream and buy at this point.
Yeah, I think there's short-term implications and long-term implications because if they unionize, for you guys that don't know, especially if this becomes a bigger thing, right?
Yeah.
Company-wide, the collective bargaining is going to be an issue, and that could potentially eat into their profits. They're already, I would say, correct me if I'm wrong, but I feel like they already compensate fairly well compared to their competitors.
The minimum wage is $15 an hour. You get health benefits day one.
So, that's the starting line, and so the union's going to try to get more. So what the implications that's going to impact their P&L, listen, you'd love for it to work out for you, but the reality is they're going to find a way to make their money.
Yeah.
So this could ultimately hurt some people down the road if it eats into their profits. But the two big issues here are how it's going to affect their P&L, and that's a short-term and a long-term issue. So I think analysts are going to be worried because they're going to feel like it's going to hit their P&L. So you're going to see the stock move in the short term. And then when it hits the P&L, I think it could potentially have long-term ramifications. The other issue you want to consider is you're frustrated if you're the new CEO because with a union, you can't move as quickly as before. Everything takes longer. Everything's just more frustrating. So that's gonna hurt them competitively because they can't be as nimble as their competitors that are non-unionized, potentially, if it becomes bigger.
Yeah, and that's some of the arguments that we've seen from Elon Musk because there was talks about unions in Tesla as well, and Elon said, I'm not going to, go against this, but here's the perks and pros and cons of this, and which are very similar to what you were mentioning. And so there's definitely some dynamics there. Obviously, we saw Dave Portnoy have the same kind of sentiments. There's some controversy that goes along with that as well, which was interesting because there was some with this too. But yeah, it is very interesting. If the vote does go through, it's definitely something that you guys should be paying attention to tomorrow. Tomorrow is when the vote goes through. So make sure you guys got your eyes on that if you're interested in some Amazon. All right, so the next one's going to be...
I got the next one.
Okay, what you got?
So the next one, I actually pulled a question. Shane Haley, thanks for this question. This is a great question.
Yeah.
How do you think the Suez Canal blockage is going to affect the market? So tell people what's going on, and then you can answer the question.
Yeah, so here's what happened. So there was a Taiwanese shipping company, the Evergreen Marine Corporation. They have a ship out there with a bunch of boxcars on it going through the Suez Canal, which is actually responsible for about 12% of all trade revenue in the world. It's a really huge port. It is very important to not just regular trade, but I mean, there's so much. I just saw a story about how much livestock is actually just sitting out in the ocean right now. It's incredible, and it impacts oil. Obviously, I think it's an insane amount of oil that gets passed through that canal as well from the Middle East to the U.S. So we could potentially be seeing an impact on oil prices. As far as the market overall, I think this is going to be pretty short lived. I would imagine that they get this ship out of the way. Actually, Fat Man soon. I just got to pause because I have to have some humor to this. We talked about this a little bit. The trajectory of this thing.
Yeah, I showed you.
Yeah, I know, but I just need to show everybody else. So here you have it. This is a very interesting pattern here that happened. So what happened was that the ship, kind of got turned around with some wind and all that good stuff. Made a big giant penis.
So this is called the phallic pattern. So we're going to go. Can I see the cursor? Can they see the cursor?
They can't, no.
Oh, damn.
I just had to. So, you kind of get the picture. The unsolicited picture.
That is legit the path it took. The wind was blowing it. It was trying to correct her out. And it made a super boner.
Yeah. So anyway,
it was not the cup and handle pattern.
Yeah, right. So anyway, is it going to impact the stock market? I think we are going to see some pockets where it is impacted. The stock market overall, I think it's tough to say, but I just think that we're going to see this very short lived. If there is an impact, it's not going to be for very long.
Do you didn't oil move up as a result because of the anticipated low supply?
Yes.
Do you think that continues this week?
I think it could potentially in the beginning of the week. But I don't think it's going to be anything crazy. I mean, oil was already moving up anyway.
Yeah.
I don't know. It'll be interesting to see how far it does go up. I don't imagine it goes up too much further from where it's at.
I'm sorry, I might have missed this, but I don't know if you said where they currently were sitting, because they actually expected to have this ship. It's called the Evergreen. The cargo ship moved out last night. They didn't.
Right.
I haven't checked recently, but the last I heard, they were actually going to unload the ship to try to make it lighter, and they added 2 more tugboats coming out. So as the last I heard, it still hasn't been freed.
They added 2 more tugboats, and then they had one earth mover. That was it.
Oh, really?
It was such a weird picture that somebody was, at least that was all that was shown. But yeah, there was just one backhoe. And just trying to get this big
trust in backhoes.
this giant ship unstuck. But yeah, I think obviously there's going to be certain stocks that are impacted, but as a overall, I don't think we actually see too much of an impact.
Yeah, I doubt it as well. Hopefully it gets moved out, but the backlog is crazy. Like the amount of ships that are is insane.
Oh my God, yeah.
I think it's up to nearly 400 last time I saw.
Just sitting in the ocean waiting.
Yeah. All right, last topic. Probably I think it's most exciting topic for me this week.
Yeah.
Is Tesla delivery numbers are coming out this week. Don't have an exact day, but they will be coming out by the end of the week.
Yep.
I just want to discuss that a little bit. What are the expectations? What do you think? Because just so everybody has level set expectations, the number of deliveries last year came in just under 500K.
Yep.
499,950 or something like that. Then the guidance for this year, Tesla estimated 750K for this year. Initial expectations were that things were looking good in China.
Yeah.
But these first quarter numbers are going to be huge. Last year, they did 88K this first quarter.
Yeah.
And then they're expecting to do, you know what, you have that number. I think it's 170.
Yes. So first quarter deliveries are going to be 170 units, which suggests a 92% year-over-year increase. And this represents a 6% quarter-over-quarter decline, and scale back that SPAC's earlier estimates of 182,000. I think that 170 is rather conservative, and that number came from RBC Wealth. And so I think that, in my opinion, I think 170 is conservative. I don't know about you, but I'm seeing perhaps maybe 225.
225?
I think that's so. My expectations for the year were over 1 million. And, you know, the reasons why I'm saying this is because COVID was so much more of a factor last year. I think that this year is going to be an excellent year for Tesla auto sales.
Well, let me ask you this question. Do you think that Tesla's not going to be impacted by the chip shortage?
I think it will be, and we're actually going to hear from Tesla this week on that as well once those numbers come out.
You know, I said last year that if they hit 1 million, this is going off. I thought the projection, because if you listened to 2 earnings calls ago, Elon actually mentioned how he alluded to the fact that 1 million was like an outside shot.
Yeah.
I thought they were going to bring estimates at like 800 to 900. I think they are playing a little bit conservative. I think it's highly unlikely we hit 1 million. However, if I'm Elon, I'm doing everything I can. There's just too many factors, too many things can go wrong. And that's my issue. They've already halted Model 3, Model Y production once. And so that's my only concern. However, if you are correct, this sucker could go to the moon.
Yes.
So you got to question the balance between the production and delivery numbers. And if your leadership, okay, how important is hitting 1 million versus how important is hitting our 750K and making sure the Cybertruck and the Semi get rolled out?
Well, and I'm glad you mentioned the Semi because we got news. And I think this just like went completely overlooked. Nobody's talked about this, there's been semis that were sent to Pepsi. Is it 15 trucks?
Yeah, 15.
Sent to Pepsi, and they have 100 left on the order. I'm sure that'll probably increase. I think this is a big deal that people are overlooking. Everybody keeps talking about the FSD, the full self-driving development. And I think that, in my opinion, this Semi deal, especially when we were talking about with pre-orders from Walmart and the like, I think that this is going to be massive. And this might be even more impactful than anything that FSD can provide, at least in the short term. I think that short term, these Semi sales continue to roll out, and they continue to roll out the fully produced semis. It's going to be big for them. And we talked about, and you, I don't know if you guys know this who are watching, the price for these semis are very competitive. It was $150,000 for the 300-mile range. It was $180,000 for the 500-mile range. Yep. And those are right in line with regular diesel-powered trucks. So I think that this is going to be huge for the trucking industry, and it's going to be huge for Tesla.
Yeah, and just to clarify, they weren't delivered the 15. It was confirmed. Tesla confirmed that they would receive 15 by the end of the year.
Oh, by the end of the year.
Yeah.
Okay. We saw them on the track, and so that's what I got confused.
Yeah, there's an order for 100. 15 of those are going to come by the end of the year, which is great. Like, that's a big question. Will Tesla be able to deliver semis by the end of the year?
Yeah.
And Cybertrucks. I mean, those are the two big questions.
Right.
Will they be able to deliver? So if they can deliver those semis, now it's a little disconcerting by the end of the year. I mean, the hope was that they would already be delivered by now, but it remains to be seen what happens. But that is great news, because if you're Tesla, you're not going to tell Pepsi we're going to deliver 15 if you're not ready to deliver 15.
Yes, correct.
Right?
Correct.
So hopefully it's sooner rather than later. But that's really excited. The storyline is the chip shortage. You know what will be crazy? Last year with Battery Day, Tesla announced that they're basically taking the battery situation in their own hands. They're building a battery factory. Why aren't they going to do that with chip shortage?
Right.
Like, what if this is the year for chip day?
Yeah.
Semiconductor day.
I mean, something, and I think as far as the chip shortage is concerned, I mean, the semiconductors are worth scooping up. They've been dropping off like crazy because of the shortage, but I think that the demand is still very much there. It's not going anywhere. People aren't going to want to stop buying chips, anything related to the semiconductor industry, cars, all of that, it's not going to slow down just because there's a backup. And we even talked about this with things like Peloton, for example. People are still ordering the shit out of them, even though they're backed up.
Yeah, for sure. So that's something to be seen. My biggest concern is the fact that they delayed their Model 3 and Model Y for up to 2 months. Yeah. So that pushes it back to June. Now, it worries me short term, but that could bode well for the second quarter and the third quarter. I mean, we can make some monster numbers. So we'll see what happens. But you talk about growth, even if they come in at 170.
Yeah.
Compared to 88,000 of last year, that's a pretty monster number.
That's a huge number.
I don't think they beat 180, but I hope to God you're right.
92% year-over-year increase.
Yep.
That's crazy.
So those are our topics for the day. How many concurrents we got, bro?
So right now we got 251 of you guys watching. So thanks so much for watching. And if you guys could hit that thumbs up, we certainly would appreciate it. And if you're new to the channel, of course, consider subscribing as well. Hit that notification bell. We go live 3 times a week. We also put out pre-recorded videos as well for helpful tips and tricks of investing, all that good stuff. If you guys want to be part of the crew, you know what to do.
All right. Now, let's go on to our top 5 stocks. I feel like we need like little intros for our top 5 stocks.
I know. I need to have like an animation too, something that gives us some good visual engagement.
Yeah.
So now we're off to our next topic, which is going to be the top 5 stocks that we are watching this week.
The meat and potatoes.
And this has been the mainstay of Stock Watch Sunday. This is why most of you guys are here. And for me this week, it's going to be very interesting. It's pretty slow as far as earnings are concerned, but I think it's still impactful. We got some pretty good ones. And the first one for me is going to be McCormick. And you guys know that I like McCormick a lot, but I think the reason why I'm looking at McCormick is not necessarily to buy it, but I really want to see how McCormick moves and what their outlook is going to be like as we reopen. If you guys recall, McCormick was huge during the stay-at-home play because people were cooking more. They were taking the trash out more because and we were talking about Clorox and all that stuff. So as far as just like the stay-at-home type stuff, they were going crazy. Well, there's been this sentiment where that, as people are going back out to work more, that they're not going to cook as at home as much more. But here's the thing, Fat Man Zoom. We saw huge increases from Restoration Hardware, huge increases from Williams-Sonoma. Williams-Sonoma is still going off. And so I think that with McCormick, we might see something very similar, and the outlook could be really positive here. The earnings are on Tuesday pre-market, estimated earnings per share at 58 cents, and I'm actually going to be a little bit conservative on this, and I'm saying 66 cents per share. The biggest question heading into Tuesday is how demand trends will respond following this past year's pandemic. And so we look at the chart here.
What's the ticker? Real quick. Say it. Ticker.
MKC. I always get this jacked up. MCK and MKC. MCK is McKesson, which is another great stock to own. But MKC is the one we're talking about today, and that is McCormick. So if we look at the chart on the daily, you can start to see that maybe this actually ended up bottoming out at 82. They did a reverse split earlier in the fall and had a pretty nice dividend as well. I say that if this does continue to move back up and start to make its way towards that 200-day MA, which it's still very far below, I think we're going to be in good shape. And the earnings that we see on Tuesday could very well give us that move upwards. And so as far as all that's concerned, needless to say, I think that if we get a good outlook from McCormick, I think that we are starting to look at the possibility of what we've been saying all along, and that is that remote work is here to stay. There's going to be more of a permanent place for people to be at home while still working. Yeah,
I think so first off, my estimates, I think they slightly beat. I have them coming in at 59 cents a share. I don't think I'm as optimistic as you as far as like outperforming or anything like that.
Yeah.
Because when I looked at their earnings, really it was the first like full stay-at-home quarter that they outperformed.
Yeah.
They missed earnings last time around.
Yeah.
So I think that I don't think there's anything that's going to blow us away. I don't think that they're going to really ridiculously underperform, but I don't think they're going to blow it out of the water. However, I do think technically there's just too much upside.
Yep.
And so even just slightly beating is good enough.
Yeah.
Right? And even just saying that we're going to have standard growth for the guidance, I think that's good enough. So I wouldn't say that I'm in the same boat as far as bullishness, as far as how their numbers are going to come out, but I will say I'm probably equally bullish on how the stock should perform moving forward.
Yeah.
Probably not a huge mover, but like a nice steady one, maybe a good recovery type.
And I mean, that's what McCormick was before all this. And they've been a good, solid company to just hold for your long-term account anyway. So I would imagine that they do still end up kind of continuing to creep up.
All right, the number 2 stock. Shout out to Nikki B and the Chaos crew brought this. Chewy. So I have Chewy earnings Tuesday after hours. Loss of 10 cents a share of the expectations. I have them beating loss of 5 cents. I really wanted to put this as positive, but I'm going to wait till next quarter. Loss of 5 cents, which is still good. Brad, in the last 5 years, pre-pandemic, spending on pets outpaced annual income by 2. Annual income increased by 25%, a little under 25%.
Yeah.
Spending on pets increased by 50%.
People love their pets,
It's $100 billion industry this year. Mark my words. I'm excited about this. I think you're going to be excited about this company. We really like this company. Huge e-commerce growth. The thing is, we've talked about a couple companies in the same vein. This has expedited the direction we've been going anyways from a consumer aspect.
Yeah.
We were going to e-commerce. This just, the COVID just sped up the process. Now that we're getting out of it, it doesn't mean people are going to stop. They're realizing how convenient it is.
Right.
They're going to stop. Why I love this stock, their auto ship program. Did you know that 69% of their sales came from auto ship, which means it's just subscription
just automatically
model.
rolling.
Yeah. So that's huge.
Yeah.
To me, that's huge.
I agree.
I love it. 2022, I predict them to be cash flow positive. They should have been this year, but they made a lot of capital investments just for scalability.
Yep.
No big deal. I like that move. But the auto ship is why I'm most excited. I think this is a great asymmetrical trade opportunity. I think this has a 5% downside and a 25% upside, 5-to-1 minimum. Brad, tell me I'm lying.
You're not. I mean, you look at the chart here, and it actually looks really, really great. It's damn near the bottom here over the last couple of weeks at 75.50. And if we see a beat out of Chewy, I have them beating at 7 cents, so not too far off from you. But I still think that there's a lot to look.
Loss of 7?
Sorry, a loss of 7 cents. Yeah, I think there's a lot to look forward to with Chewy. We've talked about how Chewy was going to be able to differentiate themselves and be competitive against something like Amazon, and I think that they're really starting to figure out how to do that with a lot of the reasons that you mentioned as well. So this looks great. I think that if you can get it at 75, it's a great time to get it as a starter and start to work your way in. We always talk about how timing the market is never a good idea, but this on the chart looks like a really good spot for it.
Yeah, 2 things real quick. Lynn's photo, Brad is using Webull, which is what he uses for a short-term account. I think you have a link in the description, right?
Link's in the description. If you guys want to use Webull, you can help us both out by clicking the link in the description and signing up with $100 into your account. We both get 2 free stocks.
I need to ask this question. Jo threw in there. It's regarding this topic.
Yeah,
great question. Red Bull Jo. If Chewy runs, would you trade BarkBox? So I think the question is, which one would you rather take, BarkBox or Chewy?
BarkBox or Chewy. I probably would take Chewy just because the market that we're in. And this kind of leads into tomorrow's topic for tomorrow's video. So make sure you're hitting the notification bell to catch that tomorrow. I think with the uncertainty in the market and how volatile things have been, I've talked about how consolidating your account into more solid stocks that are less speculative. Yeah. And so I think that when you look at some of the SPACs, the way that they've been beaten down, I think BarkBox has a lot of promise. And we've talked about how we like BarkBox just because it has the same type of business model as something like Stitch Fix, and we love Stitch Fix. But Chewy, I think, is going to be the better play.
I'd honestly say flip a coin because I think the safer play is Chewy. There's just too much upside.
Yeah.
To me, like short-term Chewy.
Right.
If you want it, but I think there's just as much upside in BarkBox. But I think STIC, we're waiting for the merger to happen. I think that the SPACs are getting beaten down. And so that would be a concern. But if you have a longer time horizon, you're fine with either one, but I would probably take a BarkBox for longer time horizon, Chewy for short term.
That's a good answer.
All right. What do we got next?
So for me, the next one's going to be Discovery, and it's ticker symbol DISCA is a ticker symbol. And this is going to be something that I think is going to be talked about all week. There's a big source of contention. Goldman Sachs, JP Morgan sold tens of billions of dollars of quite a few stocks. We saw Baidu go crazy. We saw Viacom go crazy. We saw Discovery drop off. Unbelievable amount. So much so that we saw some other financial institutions actually get margin called, and they ended up having to sell. So it just caused a huge array of problems. And now we see something like Discovery that's dropped 30%. So people are probably looking at something like Discovery thinking, oh man, how can I not buy this dip? And so the reason that I have it on the watch list this week is not necessarily because I think that you should buy it, but it's certainly the pure definition of just putting it on your watch list and seeing where this goes. We look at the chart here. I mean, it's just been absolutely decimated, dropped 30% just on Friday. You can see how much it's dropped in the days prior. Man, the crazy part is that I saw this thing going up like mad over the last quarter or two, and I was like, man, this thing looks like it's a little bit wild. And so I think that's probably why we saw Goldman Sachs cash in on some profits on this, and then JP Morgan followed suit, and then obviously the margin call came through on I cannot pronounce this name. Did you figure this out?
Nope, that's all you, brother.
So it's Archegos. I don't know. We're going to go with that. But they ended up getting margin called, had to sell millions of shares as well, and so everything just kind of snowballed with this. And so, in my opinion, though, I still think that Discovery Plus is going to be really big for them. So I think there's definitely a reason to potentially want to buy the dip on this. I mean, this comes all the way down to the 200-day moving average is at $31.45 after being all the way up to $80. I think there's got to be somewhere in the middle where it's going to be worth grabbing. The one thing that I want to try to caution you guys on, in my opinion, is just to not try to catch a falling knife and just try to buy this because you have the mindset of, well, how much further can it go? Mm-hmm. And so the answer is that it can go a lot further. It can go $30 more down. Not to say that it will, but there's that possibility. So just make sure that you're being cautious with this, and the money that you're trading with this is money that you can afford to lose, because I think we're going to be in for a very bumpy ride on things like Discovery, Baidu, Viacom. It's all going to be quite a bit of a mess over the next couple weeks.
Yeah, I agree. And this is a classic figure out your strategy and just execute, because I get it. Like, you don't want to miss out and everybody wants to catch the bottom. Yeah. But if you just wait till it gets above 40
right,
and get that confirmation, you'll miss out on 30%, right?
Yeah.
Just under 25%. But you still got 75% upside.
Yeah.
So I would be, for such a huge drop, I would wait for a considerable confirmation move up. It looks like that 40 mark is one where it might have some tough time getting over. If it gets over, I would get in and potentially set my stop right below that. But be patient on this one. But I like what you're saying, and I think this could reap some huge rewards.
Oh my God! Yeah. I mean, the bounce on this thing could be crazy. I mean, after hours, it actually ended up started to move, and it was up 2.5% after the bell closed on Friday. So there could be people starting to see the buy the dip opportunity, but again, just be careful, because there's still a lot of money out there that could be dumped into this thing.
All right, number 4 stock, we have Lululemon. Earnings also Tuesday after hours.
Quite the dramatic pause.
Earnings also after hours, $2.49 a share. It's been beaten down a little bit lately. I have the estimates coming in at $2.98. I think they're going to have a great quarter. The thing with Lulu, and I'm going to bring up a few things for you guys to consider. Love this stock.
Yeah.
Period. Full stop. But from a short-term perspective, next 2 quarters are historically slow. However, I'm interested to see what the guidance is this time, because we have stores reopening. So potentially we can have a little bit of better quarters than we normally see. So you're not going to see a $2.49 estimates, but if it's growth beyond what they historically see in the next 2 quarters in the summertime, awesome. Really, the key questions you have to ask is guidance through the rest of the year. That's always a question for our earnings. E-commerce pace. Can we keep pace while we also see in-stores grow? If so, that bodes well for them. Most importantly, Mirror sales and new revenue streams. Mirror was an acquisition which is going to be really interesting, because you're competing with the likes of Peloton.
Yeah.
So the question becomes, can you can your loyalty for your brand spill over to something like Mirror? That was a $500 million bet they made with the purchase of Mirror. I like it. I actually like the product. I think it might be yes. So we should see this earnings. I expect to see those numbers. So look out for that. If they don't give those numbers, I think it's going to hurt the stock. If they do, they come out positive, we can see this thing moving. But if you guys want specific numbers, we need $1 each quarter for the next 2 quarters guidance. If we see that, I expect Lululemon to go off.
Yeah, so Lulu barely beat last time around. Their estimated earnings per share were $2.24, came in at $2.28. You have them at nearly $3.
$2.98, yeah, 20% increase.
That's pretty crazy. So my estimate, I think that they do beat as well. I do think that they beat, but maybe not by that much. I'm going to say somewhere around 254. I think it's going to be a slight beat just like it was last time around. But, you make some pretty compelling arguments. Obviously, you have the holiday season that's in there as well. So there's definitely some things to potentially consider when it comes to Lulu. But, yeah, man, this is going to be interesting to see how this all plays out, especially when it comes to, things that we've talked about, why we've been so bullish on things like Peloton and, remote work and having that being here to stay, how this impacts things like Lulu as well as Peloton and the like. The thing about Lulu, though, is, and we've talked about this, why we like Nike and Under Armour, is with sports coming back, especially children's sports, and Lulu's athletic wear, athleisure, that's going to become more and more of a thing for them too. So I think that the outlook here is actually going to be quite good as well. Looking at the chart here, you can see that it's actually pulled back quite a bit from its highs at $400 a share. This trade closed at $314 on Friday. It actually looks like it's developed a really solid support at $301.89. We'll just call it 302. And so I think that if it can actually end up breaking up over its resistance at around 316, I think we're going to be in really good shape for Lulu, and we could see a really nice move out of this if they end up coming in and beating those earnings.
Deserve.
All right, so for me, next is going to be Airbnb. And if you guys know, I put out a couple weeks ago a video about me talking about putting 10 grand into Airbnb. My average price is $194, and $174 is what it closed at. Now, I want to make myself perfectly clear. I don't ever try to pretend like I'm the best trader there is out there, and nor do I ever actually try to time the bottom. We talk about scaling in. We talk about averaging in so that we can actually get prices from various areas. And so I had a lot of people come up to me via direct messages, social media, all that stuff. When the market's bad, everybody loves to come out in droves and tell you how wrong you are, and that's fine. But what I will tell you is that I think that something like Airbnb, for it to be selling off in the way that it is absolutely ridiculous, especially as this is going to be the perfect reopening play. And I've talked about liking stocks that are tech stocks, but also reopening plays. And this is the textbook, poster child, whatever you want to call it, of that. And so when people start going out more, we talked about how domestic travel is going to just absolutely go insane. Airbnb is going to be something that's really good to grab, especially on this dip here, in my opinion. We're getting close to where it was on the day that it IPO'd. And so I think this is just a really good opportunity. No earnings, nothing like that. It's just a stock that's come down, along with a lot of other ones, mind you. So there's a lot you could pick and choose from. But when it comes from a reopening standpoint, I just love Airbnb, man. I just don't see how this stays down here for too much longer.
We talk about social arb investing, and Dumb Money is one of the channels we both like and appreciate. I'll tell you what, man. I was planning on taking a little mini trip over the weekend in mid-April.
Yeah.
So the past 2 nights, I was on Airbnb. I looked at 5 different cities nearby, just for a quick 3-hour getaway.
Yeah.
Couldn't get an Airbnb.
Yeah.
Couldn't. I mean, I could get some crappy ones, but all the good ones were sold out. And not only that, I was looking for months out.
Yeah.
All booked.
That's crazy.
The good ones, maybe there were 3 days and 6 months. I'm not lying.
That's crazy.
And so I think that we're going to see some monster guidance on this company. And I think you're right. This stock, I'm telling you, people are going to realize too late. This thing is going to move, and this thing is some great volatility. So we
talked about how when Airbnb IPO'd, and funny enough, I bought it at like $150 some at its IPO, and hindsight's 2020. I could have held on to it and been sitting pretty on this one, but obviously risk versus reward. I was just kind of making a YOLO trade because we liked the IPO in general, but we talked about how they set the bar pretty low because of the pandemic.
Yeah.
119 million nights reserved in 2020. It was 119, 190, somewhere around there. It was a ton either way. And so I think that if they can end up blowing that kind of number out this year, which I imagine that they will based off of just your own personal experience, I think this is going to be huge. Looking at the chart here, it looks as if there's a potential support that it could actually end up falling a little bit further down to 165. So be on the lookout for that, especially if you're not into it just yet, or if you are, maybe a potential place to add. But either way, I'm not worried about being down on Airbnb. I'm just going to weather the storm here and take advantage of some opportunities as they arise.
Yeah, I mean, our thesis so far looks like it's trending in the right direction. So we'll see how it plays out. There you guys have it. Those are our top 5 stocks. If you guys want to see our stocks every week, so every Monday through Friday, we do a free watch list with our top 5 stocks we're watching that morning. You can go to ownthechaos.com, click on get the free watch list, and you too can get our 5 stocks every day.
There you have it. And so we reached part of the show where we get our Triple C stock of the week, which is the cheesecloth condom. Now, this is a stock that not necessarily is a bad one, but if you were to happen to buy this thing, it would be about as reliable as a cheesecloth condom. So this week, it is going to be EEIQ. I've been seeing this all over Twitter. People are going nuts over it. It's up 450% since its IPO. It's been absolutely insane. It just IPO'd last week, and I can't get myself around something like this that's gone up so much, especially on an IPO. Guys, this kind of plays into what we've been talking about with a lot of the SPAC plays that don't make a whole lot of sense. We talk about the good ones, right? But this is an IPO, in my opinion. It's not a SPAC, but it's an IPO that just doesn't make a whole lot of sense. And we saw this thing get halted like crazy on Friday. It just went all over the place. I think, in my opinion, this is way overvalued. And so if you do want to get yourself into some EEIQ, I understand the allure here. It's at $15.50. But, man, I just don't see how this stays up here for too much longer when it started out at almost it was under $4 a share. This just seems absolutely insane. So this is one I would actually stay away from. Had some people asking me about this one. There's no way I'd be touching this all the way up here.
All right, what do we got for our top stock under $10?
So the top stock under $10 is going to be FRSX. We haven't talked about this one for a while, but it's come down to a point to where I think is absolutely ridiculous. If you're not familiar with Foresight, they are a company that creates chips as well as cameras for autonomous vehicles. And we've seen reports from them that they successfully went through a pilot program with a Japanese manufacturer. There's only 3 of them that you probably could come to mind. That would be Nissan, Toyota, and Honda. So one of those companies seems to be working with FRSX. I think this is going to be really good for them. So they just came out with that news. They still haven't revealed what company this is, and I'm guessing it's probably the Japanese manufacturer that has requested not to actually have that revealed just yet. So for whatever reason, but I think, in my opinion, that FRSX, you look on the daily chart and it's just been beaten down. And we talk about speculative stocks. This is definitely one of those. And as it relates to the EV sector, obviously it's been beaten down with the rest of EVs, but I think this is a really good opportunity for it. We started to see this bounce here the other day. I think that this being down in the $5 range makes 0 sense. I think it's a really good opportunity for FRSX.
All right. So, how many people got in the house?
In the house right now, we got 307 with 112 likes. So
let's get those likes up, peeps.
Get the likes up.
And if you guys want to check us out every Sunday, make sure you subscribe. So we don't have a lot of time, but I want to get these questions in.
Sure.
So try to keep them as short and sweet as possible.
It's a challenge for me.
Just leave them wanting more, man. All right. So we asked our Chaos crew to send us some questions. Ask and you shall receive. So we took a few of them. Sorry if we couldn't get everybody's, but we took a few of them. First question.
Yeah.
Ash Grove 33. A couple of months back, you mentioned a SPAC name FIII. It's for a merger. EV, electric, last mile vehicle. Wondering if your opinion has changed. If you know when the merger will happen. We don't know when the merger will happen. Has your opinion changed on that?
It has not. And this has 2 things going against it. SPACs that have been beaten down like crazy and the EV sector. And this has both of those things. So I think that this is a good opportunity. Obviously, you have to understand that you're going through a lot of risk here, but I still think that FII has a lot of potential to it.
All right. The next question is from Haiti Shakur. Thanks for this question. This is a good one. General question. Warren Buffett has famously said he is against diversification. Diversification is a protection against ignorance. It makes very little sense for those who know what they're doing. That's what he says. What do you guys think about that quote? And how many stocks are you guys holding? Also, it would be nice to know which stocks you guys hold in the long-term portfolio. We won't get into that. If you tune into, that's Wednesday. We'll find a way. Ask me during the Q&A, during our Thursday Q&A. I'll give that to you guys for the Chaos Group. But the first part, what do you think?
I think Warren Buffett has his own way of doing things. Warren Buffett's done some pretty dumb shit too. I mean, he bought the airlines, in the end of February last year. Then they all dropped 50%. And he sells them at the bottom. Mm-hmm. So, I mean, you could make the argument that that was pretty idiotic. I think that the diversification is a healthy thing. I think too much diversification, you might as well just go buy yourself an ETF at that point, so it doesn't make any sense. So giving yourself some wiggle room, maybe 10 to 20 stocks, especially depending on what your strategy is, if you're long-term or short-term, and make sure that they're in different areas of the market. You're not going to want to buy every FANG stock. In my opinion, you wouldn't want to buy every FANG stock. I think you want to buy maybe one or two of them, or one or two in the airline sector, one or two, in energy, what have you. Picking good, solid companies, I think, is really the kind of the name of the game. But no, I think diversification is just fine.
I think it's fine. I understand what he's saying, and on a certain level, I agree. It depends on your risk tolerance. Yeah. There's many people who have bet money on one stock, Apple, bet money on one stock, Tesla, and won.
Right.
It depends on your risk tolerance. It depends on how much you're willing to stay in the game. But you're buying companies.
Right.
So is the person that invests his life savings in one company an idiot? I don't think so. I think you have to be willing to. Depends on your conviction, your due diligence, and you're willing to do it. It's safer diversification. You have a higher success rate diversification.
Yeah.
But someone who says that I'm going to buy Apple for the rest of my life and continuing to put in, 10% into Apple, it's high risk, but it could be high reward.
Right.
So it really depends on you. But yeah, diversification is always the safer bet in general. So next question we have is from my man Amar. Amar asked about NEO. Sorry, let me pull this up real quick.
Love Amar.
Yeah.
He's a Chaos Crew faithful.
Is there any risk about NEO in the future? How do you see the U.S. government's process on Chinese stocks impacting it?
Yeah.
What's your feelings on that?
I think there's a lot of risk with Chinese. I mean, and that's why we saw Baidu and some of the other Chinese companies sell off like crazy because of this issue that they're seeing with a lot of the Chinese companies. And now I think there's definitely opportunity. I think Baba is going to be a really good opportunity here shortly. But with NEO, there's the same risk that's involved. So, kind of going along with, if you're looking at something in the EV sector, pick one or two. Maybe, obviously, Tesla's going to be the one. As far as two is concerned, I think there's a couple of options. NEO could be one of them. NEO's come down to a point to where I'm looking at the chart here, and it's pretty close to that 200-day moving average. And I can show you the chart here. It's pretty close to the 200-day moving average. So I think there's a really good opportunity to perhaps get a starting position or maybe even add here if it holds up at these levels. But, there's still that inherent risk of it being a Chinese company. So I honestly think that something like Fisker, I would rather hold than NEO if it were me.
Yeah, and don't discount. Remember this, people, because when everybody was on the EV hype, you guys were talking like NEO was the play, not Tesla.
Yeah.
None of you guys are saying that now.
Right.
Remember this, because we've talked about the huge lead Tesla has, their ability to be nimble. And we've talked about this in the past. We haven't mentioned it recently, Brad, on air. But the reality is that Tesla is in such a better position because they spend zero on marketing.
Yeah.
And so
no money at all.
That wants to catch up to the leader has to spend more money, and they're just already at a disadvantage, not to mention the chip shortage. If Tesla's not spending money on marketing and advertising, they have now cash. If they want to tomorrow, they can decide they're going to address the chip issue and they'll be fine. No other company in this space can do what they can do.
Yep.
So just remember that. I think you're right. It's exactly what you said. But there's inherent risk in it. Next question. We got 2 more questions. We have an Ajax question that I just lost. Do you have something to say?
No, I was just saying that you were much more long-winded on that question than I was. Just for the record.
Ivan Broski, just want to know your opinion on Ajax merger with Kazoo. Are we holding, buying, selling? And are we better off with something like car lots?
I think you're better off with something like car lots, to be honest with you. So just to look at this one, Ajax, it's still going to be a good move if you're in it for the long term. But this is super speculative. I think that the risk here is real. It's at 985. Doesn't mean that it has to go up above 10. It closed at 1025. 985 is what it came down to. Just be careful here. There's so many SPACs out there. It's hard to determine which ones are going to be good and which ones are going to be bad. So just be careful. I think that if you're looking at one, look at car lots. I think that's a much better company setup wise.
All right, there are your Chaos Crew questions. I'm about to give you a couple rapid fire questions. We'll close it out. But first, do you want to invite some people to the Chaos Crew?
Yeah, so just in case you guys missed the beginning of the show, I invited everybody to check out the Chaos Crew. If you push join next to subscribe, you can get access to our daily watch list every single day before the market opens. An hour before it opens, we give 5 stocks that we think are going to be making some moves for the market opens. And if you hit the join button next to subscribe, you can get started doing that for $4.99 a month. It is an absolute screaming deal. We give access to that, not just here's a list of 5, but in-depth analysis, fundamental and technical. It's a great value for what you get. You also have the ability to upgrade on all of those to get access to our portfolios, Discord groups, all that good stuff. We'd love to have you guys part of the Chaos Crew. If you hit join next to subscribe, it will help support the channel, and we would love to have you guys as part of the crew.
All right, real quick, 4 quick rapid fire questions. 3 highest conviction stocks.
Airbnb, Penn National, and hold on. Airbnb, Penn National. I had one more. Why am I drawing a blank? Give me a second. Spirit Air Systems. Penn National, Spirit Air System, and Airbnb.
Will Amazon close the week above or below 3,000? It's currently sitting at 3,050.
Great question. Depends on tomorrow.
Well, I think it'll close above 3,000 by close Friday. Will the market end green close of Friday?
By the close of Friday, yes. The Easter rally is a thing. I think it still applies to this week. I think it'll be a fun week.
Your best dip grab opportunity for this week?
Best dip grab opportunity, there's 2. I think it's going to be Penn National. I think it's going to be Airbnb.
All right. That is all I got.
That's going to do it for us, guys. Thanks so much for hanging out. It is another Stock Watch Sunday in the books. Again, if you hadn't hit that thumbs up, we would love to have you guys hit that if you liked and enjoyed the stream. If you are new, make sure you're hitting that subscribe button. We would also love to have you as part of just the channel itself. And please also consider hitting that join button. That's going to do it for me. Batman Zoom.
Tuesday, Thursday, live stream, people, 3:30 p.m. Eastern time.
I am never going to financially recover from this.
That's everybody.
I'm rich.
That's everybody in March. See you guys.
Bye.